Hello everyone, welcome to this week's weekly market view for Monday the 8th of August to Friday the 12th of August 2022. My name is Vishal and I'm going to be looking at some key levels for this week. So let's get started. Alright, so let's start with the Nifty daily chart, and as you can see there are some key markings on the chart. These are the two key levels for next week expiry, which is the 11th of August expiry. We have the highest call open interest at 17,500 levels on the Nifty, and we have the highest 17,000 strike put open interest. So what does this indicate? This indicates that there is a possibility that price will remain range bound between the 17,000 handle and the 17,500 handle to the upside. So we are expecting to see the market to be in a sideways mode, trading primarily between these two levels, that is 17,500 and 17,000 levels for the 11th of August expiry. As you can see, the prices have just hit the supply zone and are not finding it very easy to pierce to the upside. So on the lower end, if the market does gap down on Monday as SGX Nifty is suggesting, this is what is going to be the possible range for Monday. Let's look at the Bank Nifty, and for Bank Nifty I will open the futures chart. We'll look at the futures chart first. And if you look at the highest open interest on the futures chart on the call side is at 38,500, and on the put side we have at 37,000. So what does this indicate? Again, this indicates that we are going to be range bound trading between 1,500 points for the coming week on Bank Nifty, as Bank Nifty and Nifty are expected to open gap down on Monday based on the SGX data. We should be expect to see these levels triggering more or less in the next week. If we go back to the Nifty chart right now, let's also look at the volatility gauge. And if we clearly look at the volatility gauge, the option premiums on the Nifty are more or less fairly priced. So they are not very cheap, not very expensive, as this indicator is pointing here. So we need to be a little cautious. Either we will wait for the volatility to fall down and then probably try to create some bearish vertical debit spreads, or we can even land up making some non-directional debit spreads if the price starts to trade range bound between 17,500 and 17,000. Let's look at the Bank Nifty and let us check what the volatility is indicating on the Bank Nifty. If you look at the volatility on the Bank Nifty, premiums are very low right now. In fact, they are deflated. So this is also indicating that the expectation that had to come from the RBI credit policy this week, markets have not reacted very strongly, and maybe they have taken it into consideration, or the prices are already discounted. And right now we are seeing a little bit of a selling pressure coming on both the indices actually, and whether the selling pressure leads to a correction, that is something that we need to watch out for. There was some news, some rumor regarding the China infiltration on Taiwan, and that is what caused the knee-jerk reaction, which you can see on this particular candle. And this actually took place on the 6th, on the 4th of August 2022, where you saw the market falling all the way down to 37,249 and then reacting again strongly from this area, right? So there is a fight between demand and supply right now on the price charts, and more or less we are expecting the prices to remain slightly range bound for the coming week. Let's quickly move on to the USDINR. And if you look at the USDINR, the USDINR after making an all-time high has been slightly consolidating on the monthly chart. If you go to the weekly chart, it gave a nice fall. This is the weekly candle, and since the market rose from this area, there is still a lot of demand here. So this is going to be a key area on the USDINR for the coming week, 77.85. And if you look at the daily chart, on the daily chart, we have a new supply zone created. Markets did give us a nice reaction. You can see this long wick over here, reacting from 76.68 handle. And now we see that there is this key level of demand around these areas here. So price did come very close, did not trigger this area yet, and is still showing some pressure. So if the market does come into this area, we might see another bounce coming in the USDINR. So both the USDINR and the Nifty are showing us that they are going to be more or less trading sideways or range bound for the coming week between these two levels. As you can see, the volatility indicator is indicating that option premiums on the USDINR are inflated. So at this point in time, if you are planning any option strategies on the USDINR, you should be planning for doing credit strategies and avoiding debit strategies in these market conditions. The sector for the week is going to be Nifty FMCG. So let's quickly look at the Nifty FMCG sector. So the Nifty FMCG sector on the monthly chart is making an all-time high. This is the new level of demand which is created at around 38,833 to 35,000. On the weekly chart, we do see another level of demand, although it doesn't have significant profit margin yet, but any pullback can lead to another rise in price. On the daily chart, the prices are indicating that the FMCG sector is in a very strong trend to the upside. However, right now, as the markets are making all-time highs on this particular sector, we are seeing a little bit of tiredness coming in. In fact, you can look at the daily candles of this FMCG, and maybe this is a possible sign of some profit booking that might likely to come on this sector. So we need to just be a little aware based on the daily chart. This week, Tata Consumer is announcing its results on the 10th of August. So let's quickly review Tata Consumers and let's look at some key levels on Tata Consumers. So monthly level of demand on Tata Consumers is holding. So prices are hovering between this monthly level of demand. There is a level of weekly supply on Tata Consumers, which is right here. This is your fresh level of supply. So any uptick due to the results might lead Tata Consumers to rally all the way to 870, and then we might see a little bit of profit booking coming in from the 870 odd levels. If you look at the daily chart of Tata Consumers, we do have an area of demand over here, not a very great area of demand because this area of demand has just been created, but it has not been able to achieve anything, right? So the area of supply on Tata Consumers is 870, 890, and area of demand on Tata Consumers will be around 765. Now we do have a level of demand on the intraday chart of Tata Consumers. So let's quickly go and spot that area. And that area is more or less on the 15-minute chart. So let's quickly go here. So in fact, there are two areas. We have one area of demand over here. This is this very strong base rally from 768 to 765. This is an area of demand to watch out for. And if the market does come into this area, we might expect to see a bounce coming out of the level. Now we do see this gap down coming in. So this is an area where you would want to avoid doing anything because there is selling pressure coming from this supply zone at the top here. And now we are seeing this gap down. So we might see a rally, taking into consideration FMCG is still the strong sector in this market. So prices might drive down or results might drive down the price to come towards the 768, and then we might expect to see a bounce coming in from these levels. So here is the analysis for this week. I hope you liked the analysis. We will keep doing our level best with our analysis. Hope you enjoy this, and if you do like our analysis, do not forget to subscribe to our channel, Sharekhan Education. Have a lovely week, everyone, and see you all next week. Bye-bye.
This should not be treated as a recommendation. Please conduct your own analysis or consult a financial advisor before investing.